Welcome to SectorExchange.com. I'm Jim Ferris, founder and editor. As we go through this, learn how to use and how to benefit from SectorExchange.com, what we're going to talk about in this section is sector rotation and how it works. Really, this is the crux of really what the website is all about. What I wanted to do is actually pull up a graphic here that we've used for a long time. And this is really just sector rotation applied within economic cycles. And I think it gives you a good picture of why sector rotation works, but it also gives you a good picture as to why a lot of analysts really actually do watch and track this on Wall Street. Because when you look at what's going on in a economic cycle, it kind of gives you a better clue as to what's happening. You got the early contraction period, late contraction, early expansion, mid expansion, and then late expansion. So if we started at the expansion part, which is this orange piece right here, move into the middle expansion, the red, the blue being the late expansion, and then contraction, and which would be a recessionary period, and then late contraction as you're starting to come out of the recession. So it's called sector rotation or an economic cycle because it tends to go in a circle, and that's one of the things when you look at from an investment cycle, if you will, that each of these really do apply to how all of this works, and it's not magical. It's not something that works 100% of the time. It is something that gives you data worth tracking and following as you go through. But if you look at the early expansion period, you can see that consumer expectation, or the consumer, that their expectation tends to rise. In other words, if you were thinking about coming out of the 2008 market correction, that recession that kind of lingered on into 2009, March, April, May timeframe, people started to be more optimistic. They started to want to put money to work in the markets, but they were also more willing to spend, and that's where you just see the consumer move. Industrial production tends to be flat. Inflation tends to be falling. Interest rates tend to be bottoming out, and the yield curve tends to be steep. And so what you get is really a good picture of what the economy is doing overall. And those are the kind of things that when you're looking at a market environment as a whole, I want to drag into here. This is just, no magic to this. This is just Market Watch. But if you go to Market Watch, you can see right here it says economic and politics. When you click on there, you can come here and then you can go to the U.S. economic calendar. And for the period that we're recording this, you can see all the economic data. We look at that on a regular basis because economics drive what really does happen within the United States stock market, and it has an impact on a day-to-day basis. In other words, you can see one of the things that is here on Thursday is jobless claims. Well, if we're adding jobs, then you generally have economic expansion. Economic expansion adds to earnings, blah, blah, blah. But the point being is that the economic cycle does have an impact on the market. And we could take anything that's out there. You got new home sales. Well, that impacts the home builders. And if you go from the home builders, we're building more homes, selling more homes, then that impacts whether or not people are buying furniture. It impacts whether or not people are buying things to remodel their home, Home Depot, Lowe's, those types of stocks. And it does have an impact. Existing home sales, are they picking up or are they declining? If we're selling more homes, we have more financing. So it impacts the banks. It impacts the lenders. So there's a ripple effect of good economic data impacting all the various sectors of the market. And if you start to have inflation, then you got gold and commodities moving. So all of those things very succinctly really do play into how you manage money on a day-to-day basis. So it really has, I think, an impact as to how we view the markets on a day-to-day basis. So the economic cycle, I thought it's very applicable to what we're looking at. But so that's kind of the springboard, if you will, to how we look at this. Then the second thing that we want to do is we want to actually go out and scan the market, and we want to look for various opportunities, and we want to find where we think those opportunities reside. If I want to pull this apart. This software is actually Telechart 2000, so there's no magic to the software that we're pulling up. other than that we can actually go in and pull up our watch list, and you can see that we define watch list by any myriads of things. I have hundreds and hundreds of watch lists, but if I go in and I say, all right, I want the current ETF watch list, and I pull that up, and you can see there's 37 in there, I can scan through these watch lists, and we'll pull these back so we can see the chart over here. And I can scan through these, and I can start looking at what's going on in each of these components that I just threw into this watch list at whatever point I did this. But you can see that you can start looking for trends. You can look for patterns if you're looking at technical analysis. If you want to look at fundamental data, the unique part about using Telechart is that here you can see I can sort this list by dividend yields, and I can see that XLU is the highest dividend paying ETF at 4.5% dividend. I've got IYR, which is the REIT ETF, paying 4%. So I can sort it by that. I could add to these columns right here if I want to delete that column and I want to add a column. And let's say that I want to do it by fundamental data. I click on fundamentals down here. And the only reason I'm doing this on this chart is not so much to tout what the Telechart does, but to show you that there's a lot of factors that go into scanning a list. So if I want to look at earnings per share for the latest quarter, then it's going to go in and pull that up. And I got an ETF list in there, so it's not going to pull up earnings per share. But the key to me is how do we look at the markets on a day-to-day basis is really what ultimately drives the market is the fact that we are going to find different ways to see what's moving and what's not. And if we go to, I have a thing here called sector rotation. And what this table is these are the 10 sectors of the S&P 500. I can look at them. All of these are charted right here, so I can look at the fact that here's the top 5 are XLY, XLK, XLI, XLE, and XLB, which is basic material, energies, industrials, technology, and consumer services. So what I'm looking for are the leaders, and you can see the bold white line in here is the S&P. The 3 above it are actually outperforming. So I know that XLI, which is industrials, and XLB, which is basic materials, and then I also know that XLE, which is energy, is outperforming the S&P 500. So I can actually start to go and look at where the leadership of the market is. I can also look at the laggards and how bad are they lagging. And like here at the bottom, the XLU, you can see the downturn, even though the S&P 500 has not turned down. We can see right here that XLU has turned lower along with XLP. So the defensive stocks are actually moving lower where the growth stocks are moving higher. And that's not necessarily divergence. That's just the economic cycle at work, meaning that defensive stocks tend to perform or underperform during periods where growth stocks are in favor. So we take that type of data, we filter it all into how we actually go in and look at sector rotation. So the whole idea of the website is how do we filter, if you will, the different pieces of the market. We want to filter down and find the winner. So we can start with the broad market, which in this case is the S&P 500. We can look at which sectors are leading, which we can see here that it's energy. And then I could actually dig into energy and pull up all the pieces of energy. If I go back to this chart over here and I want to look at energy, all I have to do is go into my watch list and start typing energy in here. And I'm going to pull up the energy component that I'm looking for, which happens to be the spiders, which is down here. Right here, I click on that. Now I have 40 stocks in my watch list. These happen to be all of the stocks that are in the energy ETF. So I can now filter through stock by stock to see if it's moving up. Where is the leadership? I can do all kinds of things to sort and filter based on whether I'm looking at fundamentals. Am I looking at technicals? What am I trying to accomplish here? This is the development of a disciplined strategy of defining what's going to put me into a position. So I can either buy the S&P 500 at the top end of the ladder if that's what's moving, or I can filter down. If energy becomes the piece, I could buy XLE as an example, IYE. is the Dow Jones Energy Index. So I can buy any of those ETFs, and or I can buy mutual funds that are sector driven, and I could own them. And if I want to own the individual stocks, now I can dig down into that bucket and I can say, all right, I want to own Halliburton, or I want to own Chevron or Texaco. Texaco is no longer around, but if I want to own any of those particular stocks within the energy, my age, but the issue is, how do you find the stocks? That's what we're looking for, is how do we find the stocks or the sectors that are moving? And that's really the theme of sector rotation. It really comes back to the simple premise of looking at it. Then we take all of that data and we post it to the Sector Watch page, which is on the next video that I'll explain how we actually take and filter these into a watch list and how we use them on a day-to-day basis to actually build our portfolios or our models that are on the website. So with that, come back and see how we do it.